Hi, everyone. Welcome to Making Multifamily Money. So today I kind of want to give a brief update as to my real estate portfolio and kind of share what I've learned. So right now I'm uh, renovating my 20-unit apartment complex that I own in Enid, Oklahoma. For those of you who remember, I purchased that for $350,000. I'm probably putting in around $120,000. I've renovated around 13 out of the 20 units. The 7 remaining units that haven't been renovated, it's because the existing tenants are still there. So the moment that they leave, most likely I'm going to do a renovation for each unit. It's been costing me around maybe $5,000 for a lighter turn, up to $10,000 for a heavy turn that involves a new kitchen. So, basically my goal was I got this deal off market using my direct mailing campaign. If you want to learn about my direct mailing campaign, check out my other YouTube video. And from there, what I did was I sent out letters, got the deal, and it was such a small deal, right? So when I purchased it for $350,000, I think only 15 out of 20 units were occupied. I was trying to engage multiple lenders and I was having a lot of difficulty financing this deal. And the reason for the difficulty was, number one, the loan amount was too little. So some lenders, they only like loans that are at least $500,000. Some lenders like loans that are only $1 million. So because that the property purchase price was $350,000, it's not that much money. If I'm putting 25% down, my loan is what, like maybe $270,000, give or take. And because of that, a lot of lenders did not like it. Another thing that the lenders did not like was the rents were too low in this market. This is a more rural market. It's not a I'd probably call it a secondary or tertiary market, a little bit in between. It's near kind of the border between Oklahoma and Kansas. It's definitely growing. It was a nicer area. The apartment complex was kind of in downtown Enid near an arena that was just developed. So, I knew it was kind of a more hipster area, a little bit younger of a vibe. So because of that, it really attracted me to the deal. And what so attracted me to the deal was I bought it really cheap, right? I mean, $350,000 for a 20-unit apartment complex in California, where I'm from. That's the price of a condo if you're lucky. So, back to my lending issues was, I basically had to contact multiple lenders, like Bank of the West, who I work with. They didn't really like the deal at that time. I had to actually call the existing lender because the 20 unit had a mortgage already, and even the existing lender was hesitant in financing the deal because the owner was known for not really fixing things. Like the lender mentioned to me that they had to pull teeth just to get the owner to fix something, like to change the roof or to renovate a unit. And it shows, right? When I took over the property, there was a lot of deferred maintenance. There's a lot of pest control issues that the prior owner didn't pay for. I had a burned down unit that burned down 5 years ago, and it was a complete rehab that cost me $40,000. But I mean, that's what you get, right? When you're doing value-add real estate, it's usually because the owner hasn't raised rents, they're not willing to fix it, and because of that, I bought the deal right. I got for $350,000, which is cheap. So in my, kind of fast forward, I talked to about 11 lenders, and I think the 12th lender finally said yes, and I can only get a hard money lender to finance the deal. So back in May of 2022. That was about a year ago. I had a lender said, hey, you can do 25% down. It's loan to cost. So it includes $100,000 of renovation. So I down 25% of $350,000, which I think it's roughly around $80,000. And on top of that, I get $100,000 for renovation. So the interest rate was 9%, and this is a 12-month term. 9% interest only, and I had the option to do a 3 to 6 month extension At the time when I got the loan, it was a free 3-month extension, which I wish I took early on. Because as I'm finding out today, is it now costs money if I want to do a 3 or 6 month extension, so they can change things. So, kind of talk about the property. Once I took over the property, 15 out of 20 were occupied. The moment I took over, we had a bed bug issue, so I had to fumigate all 20 units, which costed me $500 per unit, which was $10,000 total. And when I did that, for those who don't know, when you fumigate an apartment complex for roaches or bed bugs, you have to take everything out of the cupboards, everything out of the closet, put it in the middle and cover it, and then have it fumigated. But just that process of taking everything out of the drawers and cupboards and closets, it's almost like you're moving out. So that's what happened to me. Like, the moment I put the notice that, hey, we're going to fumigate on this date, I had actually a lot of tenants just leave, right? A lot of tenants left because of the bed bugs. And the moment I put notice to spray the bed bugs, even more tenants left. So, I went from 15 out of 20 all the way down to 7 out of 20 occupied. And, a couple of tenants, stopped paying as well. And they knew they were going to be evicted, so they just left before they were even evicted. In Oklahoma, you can give a 15-day notice to evict somebody. So it's a lot easier compared to California. So out the gate, my occupancy dropped significantly to 7 out of 20. So for me, that kind of gave me the opportunity to renovate these units. My initial plan was to extensively renovate, the 5 units that were occupied when I was under contract. One unit was completely burned down, which was going to cost me around $40,000. And it actually did cost me $40,000. I had, I think, 3 other units that were pretty beat up. They needed new flooring, new bathroom, kitchen cabinets are okay. But those cost me around $10,000. And then all the units that became vacant, when I took over the property, so there's another 8 more units, weren't as bad, to be honest. They probably costed me around $4,000 to $5,000 to renovate those. So that's exactly what I did. And kind of one thing that I touched on in the last video was with the hard money loan and getting reimbursed for the renovation, you have to front the money first. And after you front the money, you have to pay an inspector to come out, and they're going to inspect the work that you've done. And after the work has been inspected and it's been verified, the report has been sent to the lender, then they'll wire you the money. So that sounds great, right, on paper. But what hit me, what I realized was, the lenders follow the scope of work like a Bible. So if you say that it's going to cost you, let's say, $10,000 to replace the flooring, but it ends up costing you $15,000, the most you'll get reimbursed is $10,000, what you put in the scope of work. Even if you can show the receipts, all the bids, all the quotes that you paid $15,000, they'll only reimburse you for $10,000. And the reason for that is because the scope of work was underwritten by the bank, and because of that, they cannot deviate. So, moral of the story is your scope of work, which is just a guesstimation. Remember, right? You're just getting quick bids from a general contractor. And as you start ripping out walls, that's when you find more issues, and things might cost a little more. You might find more surprises, which is very common. And as a result, you're going to be paying for it. And if it's not in the scope of work, you're not going to be reimbursed from it. So just because I have $100,000 lined up for my lender doesn't mean I'll get all $100,000. So the key lesson is to have reserves on top of it. So because of that, I deviated from my scope of work quite a bit. So I just said, you know what, I'll just front the renovation cost myself. I have a personal line of credit through First Republic Bank, which ironically, is an issue, having issues right now, and was bought by Chase recently. But honestly, I haven't really noticed anything. I maxed out my line of credit through them. I have, some money in the bank there, not much, to keep that line of credit open. So, I haven't really been affected by all the news at First Republic Bank as of late, so far. And, I just said the interest rate's lower. It's around, I think, 5% for First Republic Bank versus the hard money loan. It'd be 9% plus I have to pay an inspector like $300 to come out and inspect it. I just said, you know what, I'll just front the money myself. If push comes to shove and I need the money, I can always, do an inspection and get the money, but not all of it, right? So fast forward to today, I've renovated about 13 out of 20 units. The occupancies are around 70%. So about 14 out of 20 of those units are occupied. And the rents I've been getting is around $550 for the newly renovated units. I actually underwrote the deal at $500. And the existing tenants that when I took over the property, they were paying around maybe $350 to $400. So when I first bought the property, when I was underwriting it, I thought rents would be $500, but it ended up being $550. So it's a little 10% bump, which has been nice. And I basically raised the rents on. Well, actually, no, a lot of tenants left, so I didn't really need to raise the rents. But we had one tenant who was only paying $250, but we had to evict them because he was letting homeless people in. And because of that, homeless people were kind of loitering around. It wasn't a great look for the apartment complex. So it was a pretty crazy battle, right? So over the span of 12 months, I renovated 13 units. Occupancy was 7 out of 20. It's now 14. Or it was actually 15 out of 20, but I had to evict one tenant, so that back down to 14. So, we did a lot of work, leased out about 10 units of all the turnover. And at that point, I just said, all right, well, I thought I had a 3-month extension at no cost. Lender emails me and says, hey, your loan matures on May 12th. Like, what's your plan? And I just said, oh, like, how about the extension, the 3-month extension? There was no fee, right? Usually they might charge a fee. And they said, no, well, that was back then. Today we charge a fee. So it's going to be a 1% of your loan fee. So if it's $300,000, 1%, $3,000. And your interest rate's going to go up by 3%. So I was paying 9%. It's going to go up to 12. And I said, okay, well, let me look at some financing options. So, I know that's the 3-month extension. If I want a 6-month extension, it's a 1.5% fee, which is tacked on to the loan. So you don't pay it up front. And then the interest rate raised by 3%. So if I need more time, if I can't find other lenders, I would probably lean towards the 6-month option to give me more time to fix it up, to get it more leased up, and to go to present more lenders, right? Because to me, one versus 1.5%, it's not that significant. And I can add to my loan. So when I refinance it, I'll pay it at that time, which is fine. So in-house, this hard money lender, they're a broker as well. So they're reaching out to different lenders in their network, and the difficulty that they've been having is the same issues at the beginning. Number one, it's in a tertiary market. A lot of lenders don't like that. The loan amount's too little. Number 3 is the occupancy 70%. A lot of lenders, they want you at like 90% when you do a cash out refinance. And then also, what's kind of crazy is my credit score took a huge hit because of a fraudulent credit card that was opened under my name without me even knowing it. And it was ironically a Chase credit card. I banked through Chase, and I didn't even see this card. And, I had to basically call Chase, cancel the card, and it took them 30 days to basically report to the, do the investigation, then report to the credit bureau, and then finally my credit score's been fixed, right? But it dropped by 100 points, and that's pretty big, right? To go from, 800 to 700 is a pretty big drop. So, I had a lot of things working against me, right? So, the broker was looking at deals, and I was hoping, hey, if I use you guys to find me a new lender, maybe you'd be flexible. May 12th is coming up here in like 9 days. Maybe if they can find me a lending partner, they get paid a little commission. I could get to the end of May, right? Or maybe a little more wiggle room where they don't call it due. But unfortunately, I had no luck. So I just said, you know what? Let me reach out to a couple of my own lenders that I know, right? So I reached out to 3. The first one is Bank of the West, who financed my 26-unit apartment complex. And they also, when I presented this deal to Bank of the West, they actually said that, at this moment, we don't like this deal, right? So, they wouldn't lend on this deal. And then I presented the deal to them now, and they basically said like, oh yeah, actually we're interested in the deal. I'm getting around $7,000 a month in rent. 14 out of 20 are renovated or rented out. Out of the 6 vacants, they're actually all renovated already and they're rent ready. So we're currently advertising them right now, and we're having a lot of interest, and hopefully people will rent it. And then one tenant that we just evicted, I'm probably gonna have to renovate that unit for around maybe $4,000 to $5,000. But after that, basically that's all the units that have been renovated, unless more tenants leave and I have to turn some more units. So they quoted me that actually, let me talk about the other 2 lenders first. So the other 2 lenders are local community banks. So one is Stride Bank. So my apartment complex is near the Stride Center, which is an arena. And I just gave them all my documents, haven't heard anything back yet, still waiting for a response. And another one's another local community bank, which is in kind of near Tulsa, Oklahoma. I think it's called Chickasha Community Bank. And I've sent them deals before, and they've quoted me pretty fast. But typically, with community banks, the terms are not going to be as great. I didn't go over them last. So I was quoted from that community bank, I think 7.5% interest over 20-year amortized loan. And for the refinance, they only do it at cost. So what does at cost mean? That means that the new loan will just be exactly the money I put in. So I cannot pull out any extra money that I didn't put in, which was a bummer, because when I underwrote the deal, I thought it was gonna be $350. I was gonna put in $100,000. I'm all in for $450, and I thought I was gonna be worth $800,000. Right? I was gonna rent out each for $500 per unit. That ended up being false. So I'm getting $550. But when I underwrote the deal, interest rates are around 5%. But now it's 7 to 7.5%. So because of the higher interest rate of 7.5%, it's harder to hit that debt service coverage ratio of 1.2. So as a result, the loan amount goes down. So I can pull out less money. So basically, they just said that you can do a loan at cost. So I ended up, I bought for $350. I put in $120. So I'm all in for $470. So my at cost is $470. So my new loan is $470, and the value, assuming 70% loan to value, is around maybe $630 to $650. Right? So I thought it was gonna be worth $800. It ended up being $650, but I can pull all my money. But hey, that's still a good deal, right? To be able to pull all your money, all your down payment, all your renovation costs, and get all your money back and own this asset that's been stabilized and renovated, that's still a good deal, right? So I'm not discouraged at all. So I just said, okay, that's one option. 7.5% interest, 20-year amortized. So Bank of the West, they quoted me saying, hey, we actually like this deal. You have an existing relationship with us, and we think we can do, at first they said at cost. So I was like, okay, well, maybe that's the trend now of banks. They only do at cost. I can't put in extra money. And I just said, hey, like if possible, could I pull extra money? Like honestly, when I underwrote this deal, I thought it'd be worth $800. But even if it's valued at $700, I can probably pull out an additional $50,000 on top of what I put in, which is fine, right? I thought I was gonna maybe pull out, 100,000, but if I can pull out 50,000, great. I can use that to renovate the remaining 7 units. And that's why I said, hey, like, honestly, I think this is probably worth around 700. I know it's a little more at cost, but I'm probably going to use that money that's extra to renovate the remaining 7 units when the tenants leave. Right? So you just got to explain what you want to do. And in the bank's eye, like, okay, you're putting the money back into the property. So, okay, great. Right? It's a win-win. So he said, okay, yeah, I mean, we can try for that. So basically, my new loan, I was all in for 470, throwing there 50. So about a loan of 520, right? And they quoted me around 7.25% and 30-year amp. So, and this is at, I think a 7-year fixed, for 7-year fixed. So if you compare the 2 loans, so Bank of the West, 7.25%, 30-year AM, 7-year fixed. For the local community bank, it's 7.5%, 20-year AM, and it's 5-year fixed. With the 7-year fixed for Bank of the West, there's a prepayment step down ladder. So if you refinance again, the first year it's 3%, the second year is 2%, the third year is 3%, or sorry, 1%. So for me, I'm like, you know what? I probably would hold on to this deal for at least 3 years. Maybe by then, interest rates go down. If not, then, I'll just hold on a little bit longer. So, I'm basically weighing these two options. And, right now I'm leaning towards Bank of the West because interest rate's lower. It's a longer term, and it's a 30-year AM, which is a huge difference. I already have an existing relationship with them, so I think it's easier to get a loan. So what I kind of learned from this experience was, you really have to be really flexible with lenders. You always have to ask multiple lenders. Even if you're working with brokers, they only have a certain network that they're working with. And even the broker that I've been using, he's based in New York, and they know bigger lenders. And even he said that, I probably have to reach out to, more local community banks in Texas and Oklahoma, because they're more willing to work in those tertiary markets and those smaller markets, smaller price points, smaller less rents. They're used to it, right? Versus bigger lenders, they don't like that, right? Some of the bigger lenders like $50K minimum per unit, right, which would be like $1 million price point. So, once he said that, it kind of reminded me, hey, I actually know, 2 local community banks. So I reached out to them and to get quotes, right? Because to me, I didn't know who would bite. Right now, Bank of the West seems promising because I can pull out more money, about $50,000 on top. Plus, they have the lower interest rate, 7-year term, and it's 30-year AM. So, it's easy, right? And I already have an existing relationship with them. So, if everything goes smoothly, and I get approved, I should find out next week. Then I'm going to present that letter to my hard money lender and say, hey, I got pre-approved with Bank of the West. They're going to need till this date, maybe end of May, early June. Can I possibly, can you extend my loan without charging me a fee? Right? I'm going to ask for that. They may say no. If the worst case is I have to pay that 1% extension fee to extend 3 more months. But I'm pulling out an extra $50,000. So, I'll be okay. Right. So, that's kind of been my experience of that. So it was kind of my first experience of a hard money lender. I'm doing 3 deals right now. So because of that, I kind of dropped my eye off the ball. When you're juggling like 5 balls, sometimes you'll make mistakes. It's common. And my issue is I beat myself up over it. But the reality is, I'm juggling 3 deals while working full time, and trying to build a social media presence. So, obviously something's going to drop, and everything's a learning curve, right? So hopefully you learn from my mistakes. And another thing that I learned was, when I listen to podcasts, they always say, oh, it's good to have a relationship with a local community bank. And I finally get why, because they know the market. They're more flexible, right? Like the local community bank, they give me an answer really fast. Versus Bank of the West, takes a little bit longer, right? And Bank of the West is a kind of a mid-sized bank. I kind of call them the best of both worlds. They're kind of bigger, that they give you good terms, but they're also small in the sense of like they're willing to work with like smaller properties, and they have the appetite for certain properties. So different banks have different appetites for different types of properties, right? And I was referred to by Bank of the West on my 26 unit by a broker, so he knew that they had an appetite for smaller deals. Right. And same with the community bank. They even kind of said that, hey, our portfolio is kind of maxed out with apartment complexes. Right now, we want to do mobile park self-storage. But hey, let me ask. And then after I presented my deal, he said that, you know what, we like your deal. I'll do it to you at cost. So, that was another thing that I learned. It said that I didn't know the concept of at cost. Like, every time you hear of BRRRRs, people are lucky to pull their money out. Right. But you heard those stories where like people hit the home run and just said, I put out on top of all my money another $100,000. And I thought that's what my deal was. Right. And honestly, if Bank of the West values my property $700,000 at 7.5% interest or 7.25% interest, honestly, it probably been worth $800,000 if the interest rates were around 4 to 5% at the time I got my 26 unit. So I think I hit my numbers correctly when I underwrote the deal. But I didn't anticipate, a year ago, interest rates would jump up this much, right? Maybe if it was 6%, it'd be worth $750, right? Now in that case, I can pull out, maybe $70,000. So, the fact that I could get all my money back plus pull out additional $50,000 for renovation, to me, that's a home run, right? And this is despite me going over budget on renovation by $20,000. This is despite me underestimating the rents by $50. This is despite me messing up my scope of work. So despite all these mistakes, I can effectively pull out all my money, my down payment, renovation costs, plus another $50,000. But I don't want to jinx myself yet. Things are going great right now, but I'm just waiting for the final approval. But if they said, hey, Steven, you can only do at cost, I'm fine. Like I said, just getting your down payment and your renovation costs back, you're recycling your money, right? At 7.5% interest, honestly, in like 3 years, the interest rates drop down to like 4 or 5. I'm going to refinance again anyways and probably pull out cash again, right? So I'm not married to this loan. I'm dating this loan. I'm not married to it. So it's fine, right? Real estate's a long-term game. So yeah, that's just something I've learned with my 20-unit apartment complex, share the experience. I'll probably do a more detailed video a bit later, but I just want to share this because it's very fresh for me right now. Like, this is what I'm actively doing right now, and I'm trying to share my thought process, my mindset to you so that you can learn. So another thing that I do is when you talk to the lenders, you have to tell them a story, right? Because these underwriters, loan officers, they need to tell a story to their underwriter. And the better that you're at storytelling, the better it is to get what you want. So you just explain yourself, right? Like for me, I told my story. I said, hey, I bought this 20-unit apartment complex. When I took over, we had a bed bug issue. The prior owner had a lot of deferred maintenance. He wasn't taking care of the property. I came in here. I renovated 13 out of 20 units. I was putting in between $5,000 to $10,000 per unit, and I was able to rent these units up by $550. And I can show my rent roll, which shows $550 rents. And it said, yeah, currently 14 out of 20 are rented out. I have 5 actively listed at $550, constantly showing it. We're doing movement specials right now to get tenants in. As tenants leave, if they leave, I'm gonna renovate the units. So I'm sharing a plan, right? Like, this is what I'm doing. This is what I've done. I repaint the exterior. I have all the invoices of all the repairs that I've done. So they can see it. I can show them my monthly P&L statements. I can show them a recent rent roll, showing my occupancy. They can see all the tenants that are new leases since I took over. I was basically leasing out 1 to 2 units per month. Starting in November, which is impressive. I have property management in place. I can say that what we've been doing, like, basically I pay, the landlord pays the water, the trash, tenants will pay their own electricity, in unit laundry, which they pay me for. So I basically can share the story, explain my situation. I got a hard money lender. I'm looking to do cash out refinance out of it. And they'll ask me like, oh, like, what's your all-in cost? So I told them 470, and they said, what do you think it's worth? So I always say, like, yeah, I think it's be worth around 650 to 700, depending on underwrite it and depending on the loans. So once you kind of share that story, they're gonna be like, all right, I'm gonna ask for all these documents. So they ask for quite a bit. Your tax returns. I asked for like a pay stub, some bank statements, LLC documents. So for me, I want to consolidate from a different LLC to the same LLC as my 26 unit. Because in California, we have to pay $800 per LLC. So I don't want to go too crazy of LLCs. I want to cut down the number of LLCs that I own. They're going to ask for P&Ls. They want to ask for a personal financial statement, updated one. They want to know your real estate schedule, so you get to list all your properties out. So the faster that you can do this and provide all this information, number one, it makes you look more impressive because you're buttoned up and ready to go. And number two is that it makes them do their job faster, right? So because I engaged 3 different lenders, I had all my documents in place, emailed it. And at that point, once you talk to your 3 lenders, give them all your documents, typically they're going to ask questions about things afterwards. So, they might ask about your tax return, like, hey, why is this property of such high expense? Is it one time? Is it recurring? And then I'll just explain that, hey, it is a one-time expense because, I'm doing renovations. Because of that, the utility bill is higher than usual. The contractor's in there all day. They're using a lot of tools. So because of that, the electricity bill is higher than usual. But the tenants, when we lease it out, they're paying electricity. So you have to be able to tell the story and show that you're experienced, right? With Bank of the West, it was easy because I already have a 26 unit that I owned for almost 2 years with them. They see my track record, they see my payment. So it's like an easier sell. And on top of that, I had to explain my credit score situation, why I got hit because of project activity. So I was very proactive, gave him all the information he needed because I know what he wants, right? And my numbers weren't outlandish. Like, I was very conservative. I said, hey, I have an appraisal from a year ago. Said that my property will appraised for around 630. If you can use that, it can maybe save me some money, but more importantly, save me some time. Because if we can, with loans, the thing that takes the longest is the appraisal. The appraisal takes 1 to 3 weeks to get someone out there. They got to inspect it, write a report, right? If I can cut out that appraisal process and you're willing to use my old appraisal from a year ago, I'll save like $3,000. But on top of that, it saves me about 1 to 3 weeks. And right now, time is of the essence, right? Because if I can close on my loan by the 12th, I don't have to pay the extension fee of 1%. So, it's worth a shot to ask. And I sent them my old appraisal report. And, unfortunately, they said, no, we can't use it. It's too old. And we want to justify higher value. So he said, to your benefit, it's better to get a new one. I said, fine, that's fine, right? And he said that we can throw that appraisal into the loan. So it's financed. I was like, perfect. No money out of my pocket once again, right? So, once again, they sent me a letter of interest that I can send to the hard money lender, but it's not serious because, it's not official. But, hopefully next week, if they approve me, then I can show them the letter, and hopefully they'll just give me more time about charging me more money to show that I'm working towards paying them off. So, that's kind of been my experience so far. This is my first hard money loan. This is my first full cycle BRRRR on a 20 unit apartment complex. Very excited. Also probably going to do a full cycle BRRRR on my 26 unit, but that one's taking a little bit longer than I would like. Renovation's taking a lot longer. Renting out takes a little bit longer, but to be honest, I'm not on that property manager as much compared to my 20 unit because I have a good loan. It's 10 years fixed, so I'm not in as much of a hurry on that one. And I think I have a 2% prepayment penalty, so I'm waiting maybe another year or two before it's 1% before I do a refinance. And maybe one day I can combine both my 26 unit and my 20 unit, put it under one loan, do a big cash out refinance. Maybe I'll get better rates, right? So that's how you stack real estate. You put the two properties, they're already in the same, they're going to be in the same LLC, do a cash out refinance, pull out both. So that if I were to sell it down the road, which I'm not, I can package it together and justify a higher purchase price because now it's a 46 unit apartment complex versus the 26 and the 20. So, that's what's kind of nice about real estate, right? And, at that point, I can pull out even more money from both properties. So, overall, hopefully you found value from this session. Please drop your questions down below. If there's a certain topic that you want for me to discuss, drop a question down below, and I hope to see you in the next session. Thank you so much.